All right, good morning, everybody. Asian markets are still closed, but just like when our markets are closed, they can have futures trading. The FTSE took one heck of a little dive earlier, getting some rebound back now. They had a global or a year-to-date forward projection GDP number that kind of freaked people out a little bit. Earnings are pretty high on the list for what's affecting markets. Behind that, we're still in blackout mode. There was some posts yesterday that kind of shook the market up a little bit from that Nick Tamaros guy, that Fed whisperer. There's still a whole lot of threat from Bank of Japan. And that's really the big end of it. We do have some manufacturing data, but we don't have really any speakers. Not US. The US is in blackout mode, but we don't really have Fed speakers from any other nation to worry about either. Not really. Just on a side note, in the first week of January, the dash for trash, low float, high short, penny names that have been exploding. Those names were heavily shorted last year, and we're seeing a lot of short covering in that first week, which bled over into mid caps and then now into large caps. And we're just seeing this crazy rally. And I continue to see and hear the frustration from people who feel like they missed out. And it was a heck of a rally, almost not even considered a rally, more of an explosion, where we've seen names moving, 20% or more in 2 days, 25%, to just these crazy, massive surges to the upside. But that's a surge to the upside. That's not a trend, right? And trying to time a surge, it'd be pure luck, right? So if you were present enough to catch what was going on in the micro caps and the penny stock trash, and then you kind of bled that contagion over into mid caps and large caps, then sure, you were ready for this massive surge to the upside. Otherwise, it's just movement. So just because the market is moving around doesn't mean it's tradable. It doesn't mean that you missed something or that you somehow have to get in there and participate because the market's moving around. All it's doing is causing a bunch of FOMO and causing people to take trades that they shouldn't be taking because they feel they're missing out on this exceptional move. It's tradable. Don't get me wrong. You can just close your eyes, hold your nose, and jump into it and hope that it all works out. But it wouldn't have been based on any pattern or setup or signal or opportunity. We have additional auctions today, so watch the clock. 1 o'clock is the last bit of news, since the CPI at 445 will be for another nation. It's not ours, and it will be too late in the day for us to even worry about. So 11, 11:30, and 1 o'clock. Once we get past, say, 1:15 or so, if there was going to be any effect from that auction, the 2-year, you would have known it by then, right? So it should manifest in some sort of price action by, 1:15, maybe 20 after 1 at the worst. And then you should be good to go for your 0 day at that point. We have a narrow IB again today, initial balance. And the volume continues to come in kind of light, less than 100,000. So right now we're going to be looking for a resolution of this, either top side breakout or bottom side breakout. Now, yesterday we had enough movement that we have a reasonably decent range today that we could travel back and forth in, but we're not at the top of the box and we're not at the bottom of the box. So don't diddle in the middle. We're hanging out right there on the daily pivot point. We need an opportunity here to either, trade short off the highs or high off the lows, or to get a breakout. When we're sitting in the middle, it's more of a coin toss on which direction we're going to go. And that's not a good way to trade. The ADR continues to get smaller and smaller. This makes sense because the more that we get these sideways days, the less the ADR is going to get. This is a false play though, right? We're range bound. And the longer we stay range bound, the less we get that violence and that volatility, and that smaller the measure becomes. But there's still a big move potentially on the horizon. Even after all of this movement in the last 2 days where we've exploded to the upside like we did, we're still right back at the same, we're still in the box. We're also still maintaining above the weekly pivot point. We're going to maintain our bullish bias as long as we stay above that weekly pivot. But obviously, if we are moving down towards it, it's hard to keep a bullish bias. The idea that we're going to keep a bullish bias if we stay above the weekly is as long as the market continues to offer bullish opportunities, right? A lot of times when we're looking at a setup, it's an either or. And we say, if it breaks above this, we go long. If it breaks below this, we go short. So those either ors tied in with the weekly pivot. All right, like we discussed yesterday, we now have a much smaller volume profile on the 10-day, 30-minute. 3,900 is the bottom, 4,000 is the top. Basically, I'm just kind of using some creative license there. There's no shape here to this. We don't have the classic D, B, P, none of those. $40.11 is a cog line. It's also the point of control this morning. Below that, things get a little shallow, widen back out again at 39.90. Shallow again, widens back out at 39.70. If we were to break down through this to the downside, have no doubts about this. We will run right through these levels. There's nothing there. Right. So even though it looks like there's some sort of volume node or volume support there, we'll rip right through that like it just doesn't exist at all. When we're at the bottom of the box, we expect to go to the top. And when we're at the top of the box, we expect to go to the bottom. We are at the top of the box, so we expect to go to the bottom. Doesn't happen in a day. Mapping out the 5x5. We still have the VPOC overhead 4076. We still have one down below 3891. We're 1% above the 10-day moving average. So we're about 1/3 of the way to being overbought. We're not there yet. The market could continue to run to the upside without any hesitation to be able to say we haven't gone too far too fast yet. We wouldn't want to short this just because it moved 7% in 2 days, whatever the percentage is, 3.5%. So it hasn't gone too far or too fast. We're not outrunning anything. We're at 1.8% away from the 10-week. So again, here as well, we haven't outrun the 10-week. We haven't moved too far too fast. We shouldn't short this just because it's made a reasonably decent move. Yesterday we had banks and the mega market cap or the NY FANG moving together. That teamwork worked out really nice. Gave the market one heck of a boost. But it's worth noting when we lost the green line. Now, if you're not used to using this tool, it's a little bit about kind of getting familiar with just the image that it presents, right? We don't try to necessarily read it through the day. One thing that I focus on is if the green line is sitting in the middle of this channel. When we're moving to the upside, if I want to be convinced that the strong move is going to continue to hold and we're going to continue to push through the day to the upside, then that green line needs to be the leader to the upside. If it stays within the channel, within the middle, we can grind higher, but I don't trust it to stay. And one thing we always want to focus on is a green line breakout. So if it changes direction and leads to the downside or to the upside, but if it changes direction and breaks through or breaks over, crosses through the other lines, that's a huge heads up that something drastic is about to change in the market. It ties right in with that move that we had yesterday when finance shifted on a dime and started heading back towards VWAP. This move kind of caught me off guard a little bit. It started to the downside at not at a half hour and not at a full hour, but on a 15-minute. A little bit of a surprise. But looking through the signals, there was the breakdown. We started to lose NY Fang. Finance was leading it to the downside. We quit expanding in the advancing and declining issues. And we had a negative print, got below that 800. Of course, that none of that comes into play with being able to spot the turn before the turn happened, but there wasn't any warning ahead of time, other than we were topping out, right? But that's like an overshoot. All right, Tesla's trying to bring it back again. It kind of lost some of it in the overnight. A lot of these are just trash. In Google and NVIDIA. There it goes. Now, I was having this discussion with somebody yesterday about pre-market opportunities and catching the trade ahead of time, or at least not catching the trade setup. So I thought it'd be a good idea this morning to kind of share that conversation, the setups that we were looking at. MRK was red yesterday going into the close and is in a nice tight little wedge formation. UNH, not necessarily a wedge, but more of an IX10. Johnson & Johnson, but it's got earnings, right? So we kind of just leave that one alone. AMGN, big expansion bar on the third candle here. If it goes red to green, something we'd want to watch for in the pre-market. This would be the kind of work in the evening, right? You set up a grid like this. It's the Dow Jones that we're looking at, right? The 30 names in the Dow Jones. Set up a grid like this. You take 2 or 3 minutes, kind of poke around and identify the ones that may give you the signal that you're looking for tomorrow. If the signal isn't there in the pre-market, then you're just done. It's no big deal. There is no trade. So Verizon, for an example, other than the earnings, nice tight wedge formation, red candle yesterday. We'd be looking for a red to green this morning. Now I'm focused on the long one, the upside breakout play, but we, could look for a follow through to the downside. Either way, we would be looking to resolve this 3-bar wedge, this little range, like an IX10 range. right there. So all it has to do is leave the range. Now, we already discussed there's earnings coming up, but if you're looking for a one-day trade where, like an intraday, all you need is a breakout or a breakdown of that IX10 and away you go. The goal is to kind of get you in the habit of looking for things that have not yet made the move, and then recognizing what the setup would be for the move that is on deck. If we continue to focus on Verizon, for an example, there's a promise that says it can't stay here. It can't stay in that box. It has to leave the range at some point. A topside breakout after being compressed for 2 or 3 days could get us back to that yellow line, that descending trend line, within 1 or 2 days in an expansion play. It would look a lot like Intel. 2 big bars back up to the top of the range, done. Right? Or Walgreens. You're not looking for a run to the moon. Just 1 or 2 days expanding, and then you're right back out again. But it's being aware of the opportunity before the bell even rings in the morning by recognizing names that have the setup that you're looking for, so that in the pre-market, we can see, are they bid up? Are they gapped up? Are they gapped down? Is there any news that goes with the sector that it belongs to the industry, to its peers? Are any of them reporting that might cause sympathy for this name to move? So you can kind of get ahead of the run. So with that in mind, Boeing got a TRB. We'd be looking for a follow through. Walgreens has already reported. We're coming up into it. We rallied into resistance. We'd be looking for either a breakdown or a breakout there. Caterpillar closed the gap. PG is done with earnings, and we got his nice little wedge. Nike rally into resistance. JP Morgan already reported, had a 2-bar breakout yesterday, looking for a resolution here. If it's going to complete the move, maybe come back up and get this gap closed. Right, a 2-bar expansion, a lot like Intel or the Qs or the S&P. UNH, IBM. And just by going through the Dow, we can find, I don't know, 6, 7, 8 different names that all kind of fit this category. And of course, you don't want to try to watch all 8 names. You can set alert on these names, go through while the market's closed after hours and try to game out what its average daily range is, which one of these have the better options that fit the needs for you, has liquidity that you like, maybe is a stock price that you like. And try to weed out things, be strict with it, weed out things that you really just don't want to trade, whether it's got a bad bid ask, it doesn't have penny wide increments, maybe it doesn't have the liquidity that you like, something that is negative enough that you take it off of the list so that you can hone things down to a very small actionable list. Then you can tighten up that grid so you're not looking at 32 names or 30 names. Kind of bring it into 4, maybe 6, 8. You can right click to set alerts. You can set an alert on anything that you would want to look at. Any indicator that you use, you can set an alert on it. Say like a moving average crossover, a Bollinger Band breakout. Anything that you would look at on a stock chart on Thinkorswim, any indicator that you would want to see, you can use for an alert. This is kind of the idea behind the morning briefing, right? That it's not always the S&P, which I spend a lot of time focused on the S&P, but it's my morning briefing. You know, I built it designed for what I need. So my number one goal first is the S&P. And then secondly comes in and focus on, you know, equity names and the sectors and anything else. So we still got some room in Brent crude and WTI. If we're looking to see this top out, we're not yet at the top, so there's still room to expand to the upside. And looking at the S&P and the Dow here on the 1 hour, you can kind of see this controlling bar. That's the one in control. All right, so we got to get outside of that bar. And it's not the high and low of yesterday. It's that afternoon dump. So 40.30 to 39.90. Let's bring that back over to Thinkorswim. We got to get outside of this bar. Now, if you want to tighten that up again and go even smaller, then it would be this green bar here. The last hour of trading in the RTH yesterday. So a topside breakout. First get above 40.40. Look for a little bit of a Busby, some validation of the breakout. Then we focus on yesterday's high, 40.56. Then we focus on an expansion beyond that. For a downside breakout, again, we'd be looking for a Busby, a validation of the breakout to the downside. Focus on the cash open of yesterday at 40.07. Then the RTH low of yesterday, 39.85. And then back into the box and dealing with that big move on Friday. All right, KWeb is down. That's our China internet names. So when we get over to TradingView, we want to see if the names that we've been focused on, PDD, JD, Baidu, Baba, Neo, that they're all down with KWeb. Otherwise, if they're not, the ones that aren't yet down, that haven't yet made the move, can either be leaders for a new up run, or they just have not yet got the message and would be a great short. One or the other is going to be wrong, right? We want to play the one that's wrong. Emerging markets also down, which kind of ties in with Asia being down, since emerging markets has a lot of Asian names in it. Natural gas is up, volatility is up, but the rest is flat. It's this flat market that we're continuing to focus on, right? These pre-market zones where we're just doing nothing, and then the market opens with this violent, explosive move. "17 names are down at least 0.5% this morning in the S&P. Semiconductors make up the most of that. Drugstore chains, internet services come in behind that, with Meta, Google. Mostly, I would be focusing on the semiconductors this morning. And for the NASDAQ, 25 names. So 25% of the NASDAQ is down this morning, 0.5% or more. A lot of those are semiconductors. Then there's our China names, PDD, or at least one of them. We're not seeing the other ones in there. All right, so it seems like volume-wise, Baba's getting the most love this morning. Still holding on an inside day at the moment. But this is a perfect example of an opportunity for an inside day breakout that we recognize in the pre-market. So we're looking for either the breakout or the failure to break out. So as we come into the open this morning, I want to keep this on the watch list and see if we're going to get that breakdown and then a retest like a Busby and a continuation, or if it fails to break down and starts to make that move to the upside. We've seen enough expansion in the last few days that a really good play would be if it fails to break out, makes it to the top, and then breaks out of the top instead of the bottom and begins to expand to the upside at that point. So in these really close-in discussions, a good example here is NVIDIA, where we closed in the lower part of this red day. In the pre-market the next day, it rallied back up and it opened near the previous day's open. It got a little weak, so it kind of faded some, and then it rallied up and it broke out of yesterday's levels. It closed the gap and just kept right on going, got to the previous day's open and made it nearly all the way up to the previous day's high above the other previous day. And all it started with is a red to green. So you've got this trend here, mild pullback, red to green, inside day breakout, 2-bar expansion. At the end of that 2-bar expansion, you're looking to get out on the end of this day, right? If you're holding multiple positions, multiple lots, then you would just want to be out of most of your position by the end of that day. That way you can, carry a little bit forward, but you've already locked in all of your gains. If you're in a single lot, you basically got to wrap it up there. Simple, easy. There's not a lot to this. So you're able to hone in and add, little minor things that can make it easier for you to trade. Try to personalize this strategy as much as possible, but it's just a very simple red to green with a 1 or a 2 day play, and you catch it in the pre-market with that gap up or a gap down if you want to trade it to the downside. Another one that fits, it's the same kind of category, is a pre-market move like this, where in the pre-market we rally nearly completely out of the previous day's range. Then when we opened, there wasn't much of a downside move here. There's almost no downside move at all. And then we expand and got outside of the previous day's bar, looking to close the gap. So if you've got a red day and then you expand in the pre-market completely out, all the way out, that's crazy super bullish. We had a couple of those last year. Right here for an example where we closed all the way down here and then we opened the next day way up there. That is just absolutely insane bullish. All right, so Coke is on that list this morning. Got this nice tight wedge. Now that green candle is solid. So what that means, since it's not hollow like the normal ones, it means that we gapped up yesterday and we closed lower than we opened, but we closed higher than the previous day's close. That's why it's a green candle, because we closed higher than the previous close. But it's a solid green candle because we closed lower than we opened. These are trend candles. If you go into your settings, you can choose which ones you want. I've got candle trend. So it's just a little bit more information. So what we're looking for here in the pre-market is for Coke to have rallied up near the the high of the previous day so that we can look for, that topside breakout. And Coke hasn't done anything this morning, so it doesn't really fit the bill. We haven't got that breakout, but that's what we'd be looking for. This is one of those that are set up ready to go. Boeing is a perfect example. It happened yesterday. So, we would have want to have caught this yesterday. Went into the close. The next morning in the pre-market, we were looking to open higher than the previous day's high. We had some weakness, sure, and the follow through was kind of, a little less than stellar, but still we closed outside of this range. So we did get our IX10 breakout and our inside day breakout, and it all started with a rally up in the pre-market higher than the previous day completely. So now we could be watching Boeing for follow through this morning, which it's not getting it so far. It's still soft, basically where we closed. So this isn't really inspiring a whole lot of confidence. It is a TRB, an IX10, and an inside day breakout, and an R2G. But we're not really seeing that follow through that would, get me excited about the move, at least not yet this morning. PG had earnings. It's got a market maker move still. That close in the lower portion is the only reason that I'm even really looking at this. If I wanted a topside breakout and it closed like this, then this is perfect, but we're not getting it, right? We can see that there's no real follow through today. Well, what we would want to see is a rally back up in the pre-market and an attempt to break out. Now you could try to trade this short since that's, the follow through from after earnings, but you got to kind of think about the risk to reward at this point. Could it go lower? Yeah, absolutely. I mean, we could break 140 and just really start picking up speed to the downside, but it's already expanded significantly. The easy money has already been made, the easy short, so to speak. And it had earnings, but the earnings must have been mixed because it didn't dump. The market didn't just trash it, but it didn't rally either. It's a lack of commitment, lack of follow through. Nice move in Nike here. Same setup. R2G after a really nice trend. This one would have been less tricky though, unless you were just watching it in the intraday and seen the inside day breakout, because it didn't rally up and get up there before the open. So far, the earnings on Verizon don't seem to have been very positive. Got to let them finish whatever it is that they've got to say, and we can circle back on that. You'd want to revisit that later in the morning. Same thing with 3M. So far, it's not looking really all that hot. So one thing that can make all of this a whole lot easier is if you use the scanner. Now, I'm not a big fan of scanning for things to trade. I think that's a waste of time, especially with a free scanner. This thing updates like every 5 minutes, right? So if you're trying to use it on an intraday and stay up to speed with what's moving, something that rechecks the servers about every 5 minutes is going to leave you sitting blind for 5 minutes while you're waiting to see what changed again. So not a really good way to do things. But if you use it to eliminate things that you don't want to trade, that's a good way to use this thing, right? So feed it the details of what you don't want and then keep what's left. So things that have weekly options, there's like 600 names. And that's a lot of names. If you cut that list down by saying things that have weekly options and have penny-wide increments, then you get about 360 names. Still a lot of names. Cut those down into ETFs only. You got about 36 names. Take ETFs out, then you've got around 300 names. Focus on open interest of around 25K. And you get 100 names. So, a lot closer, nearly manageable at that point. From here, you could eliminate things that have earnings in the next 2 days or things that have dividend in the next few days. You could eliminate things that are too costly for you, right? If you don't like trading penny stock trash, you could get rid of these ones that are less than, say, $5. And by the time you're done, you have a more manageable list, and you, at that point, could go through and maybe weed out some of them by hand. That'd be some good weekend work, right? Putting together a list and eliminating names off of this list by hand that don't fit the criteria that you're looking for. Then with whatever's left, you could focus on new 52-week highs, new 52-week lows, new 2-week highs, and new 2-week lows. Moving average crossovers, inside days. So you can use this thing after hours to kind of divide that list down into manageable segments so that in the pre-market, now when you're doing your own morning briefing, you've got this small list to focus on that has the setup that you're looking for, like a red to green, IX10, TRB, and you're good to go. When you tie it in with something like breadth, looking at how many names are advancing in the pre-market or how many names are declining in the pre-market, when we see 60 or 70% of everything out there having moved more than 0.5% this morning, then you've got one more piece of the puzzle, the checklist that says, we're more or less bullish. All right, so as we come near the open this morning, watch to see if we set a low and pull back off of it. If we set a low and we pull back off of it, when we get into the cash open, we very well could retest that low and then expand hard to the upside. If we don't get that done in the pre-market and we come down into the open and then test this low, you got to be a little more concerned about actually breaking through it and heading down. So we want to see a test before the open and then draw back away from that low. What it'll do is it'll leave a pivot point down here that we'll focus on when we get into the open. If we do rally to the upside this morning, watch for an overshoot reversal. So when we come into 40.40, we could easily overshoot that a little bit, staying below 40.50. And it would be a head fake dump play. It looked very much like yesterday, 40.50, straight back down again, 40.50, overshoot, back down again. right? Clear example of what we're looking for if we come running up and get through that 40-40 this morning. For the low, let me flip this thing over. It'll look a lot like this. Come on, Thinkorswim. Where we set a low right before the open. And then we draw back up off of that low and we retest that low in the cash session, and then we take off. Right? So examples of what we're talking about. It's always better to have a visual. All right. Everybody, be careful, be safe, have a good morning. I'll see y'all tomorrow.